Hello everyone, welcome to Live in Conversation by MentorKart, and I wish you all a very happy new year. First of all, I'd like to thank you all for watching and attending the live sessions we at MentorKart brings you for, and we are witnessing thousands of views on these, and it's growing every day. So thank you so much. We are happy that you are liking them, and as you are aware that MentorKart bringing these live interactions with industry leaders, entrepreneurs, investors, coaches, and mentors to share their views and answer your queries and questions you may have. In continuation of these initiative, today our special guest Mr. Tushar Kansal. He is investor, entrepreneur, he is founder of Consultancy Venture. He has worked earlier in leadership roles in driving businesses with the organizations like Deloitte, Times of India, Brand Capital, and MTS India. So let's welcome Mr. Tushar Kansal on this show, live in conversation by MentorKart, and discuss with him about startups, fundraising, and overall ecosystem. Hello, Mr. Tushar, how are you?
I'm
Welcome to the
good. I'm
live.
good, Ashish. Thank you, Ashish. Thank you so much. It has been quite an experience, seeing all your. I never miss your shows, and it's not only the people who you call, but your own the way you conduct it. With so much of diligence and bringing out the best in every speaker. I was really looking forward to come on your show, and it's my humble pleasure to be here and to be talking to you. And also, I will try and give my best to a lot of listeners out here. I will try to do my best.
Thank you, Mr. Tushar. I'm sure we will be able to add the value to our audience. That's what matter the most. And as we talk about startups, funding by default comes into the questions, queries, answers in all conversations. What founder does, and the most question founders ask about funding and all. So we'll take it up those things. We'll talk about startups today. We will talk about various scenarios which are happening pre and post COVID, especially, right? And I think so. Now we have a good news that we have vaccination starting, right? A lot of
Yeah.
dry runs have done. I'm saying so. A lot of good news for India, and I think so for the global world also, as world is looking towards us in terms of we can solve not only our problem but the global problem which is currently happening, and which is the most. So India has proven again, and I'm sure that the companies, startups, and all is talking about. And now I think so one more initiative government of India is talking about now, taking a startup to international market. And I think so there is some program which is going on and going to start on 15th of January. We'll talk about a couple of those things, and I'm sure we will have a lot of good inputs on that. So the first question, so when I do, how I create the questions is that I keep meeting startups every day on MentorKart platform and in one-on-one conversations, and I come across many questions, right? So what I generally do when I call my guest, I keep noting those questions. I keep answering them to the startup who talk to me, obviously, but we'd like to take the views of various investors, industry leaders, entrepreneurs, and all. And that's what this show is all about. Um, one thing which comes into founders from founder side is most nowadays, especially a post-COVID, that how fundraising process or mindset change during the recent times. And we would like to know this from investor mindset actually, right? Where how you guys think about it, and I'll talk about maybe you can also give some examples that of the fundraising you have done in recent times.
So the mindset changed drastically. I mean, it's not a very relevant example, but I'll give you an example of my friend who owns six microbreweries in Gurgaon and does around 85 crore turnover. And these are all the successful ones. As soon as the COVID came, he just shut down all six and he said that he knew that this is a extraordinary black swan kind of red flag kind of event, and it will affect the markets for the longer term. So when we have people taking that kind of decisions, if from the point of view of investors, if you look at dot-com boom and bust, and then you look
Mm-hmm.
at 2000, 2008 Lehman crisis, and
Mm.
now COVID, from the point of view of investor, technology's march has went on. It is going on. Now technology is intruding our homes. One reason why Apple commands a $2 trillion valuation is because the smartphone is very sticky. There is a lot of stickiness to the product.
Correct.
So investors want the use of these platforms to get services and products faster, in a more efficient way, cheaper, and also use this particular platform for reaching out to audiences in a very measured way. Another way investors look at things is data crunching. So use of artificial intelligence and machine learning to build data moats around and capturing data the right way. So all these, the thought has changed completely. Now we talk about defensibility. I mean, there is a fund which has been investing a lot in technology. After
Mm-hmm.
COVID came, they started investing in companies, only those which have an intellectual property, and
Okay.
they keep the intellectual property as collateral. So if they are not able to get an exit, they have a right to sell the intellectual property. So these are the ways investors are thinking. There are a lot of sectors which have suddenly come up. Education technology is one, and your kind of platform is like tailor made for such times, because it delivers such value added information in the right way to people's homes and offices. And I believe that there is a lot of democratization which has happened across industries, especially in education technology, health technology. There is artificial intelligence, machine learning. Agri tech has taken play a lot, has taken off because of government's action in the farm laws. Then government has taken away ISRO's monopoly, so space tech has suddenly become very hot, and
Mm.
so this is the way things have changed.
Absolutely. Technology everywhere. I think so. I always used to tell all entrepreneur that man, technology is good. Technology is good for scaling it, and that's what customer love it. That's what investor loves it. But remember that it's always business drives technology. It is never the technology drive business. So there has to be need in the market. So it's not that you have a machine learning startup and it's going to thrive. Ultimately, you have to see what problem you are solving, what business need that exists. Machine learning or algorithms and all these things gives you a lot of benefit in terms of when it comes to scaling and automation, etc. But there has to be a problem which you are solving, and that has to be a need in the market, and that is what to be supported with. I agree the technology startups are growing, but ultimately they are supposed to solve some problem which is required. Okay, so the next question which generally comes to me, sir, how do I connect to investors? And that is one of the things. How do I reach out to them? How do I talk to them? People have one myth in their mind. Many of them, I find them, they come and say that, sir, I pitched to investor. He did not say no. He did not say yes. He said, okay, let's discuss later. But do I do? I need money tomorrow. So maybe something like that in terms of connecting, as well as what is that expectation need to be set when you pitch to an investor.
See, the whole problem with India is we have too much of a population. So line बहुत जल्दी लगती है. I mean, investor को देखो, he is getting 20 to 40 pitch decks in one day.
Yes.
So his mind space is so, that he prioritizes things. He replies to emails sometimes after 15 days, and that is the problem. The problem is not that the investor has come from the moon. uh, so you know uh, my advice is simple: 4 5 things. First of all, have a good internet presence. Anybody searches Ashish Khare, the first 10 to 20 results on Google, beyond that doesn't matter. They should say, they should speak out as to what you are. So that
Absolutely.
means a good LinkedIn profile. That means a good website. That means maybe some of articles which you have written, relevant articles to your industry. Maybe you blog, maybe you have given some videos. So end of the day, writing a blog about your business is not a difficult task. So that is the hygiene factor. The hygiene factor is that your internet presence should be good, and more than good, it should be very clear as to what defines you as a person, uh, and your professional side. The second is that don't try and avoid cold calling the investors. Reach out through somebody, and the best way to reach out is through the founders of their investee companies. So if you
Yes.
make a friendship with the founders of investee companies, they can refer you to the fund guy, and the fund guy has already invested in that company, so he will welcome you talking to you. Third, get a nice pitch deck made. Keep it simple, crisp, not more than 12 to 15 slides. There is a
Hmm.
study which happened that an investor gives around 90 seconds to the pitch deck. So 90 seconds may it should be interesting, short, crisp, and yet tell your story. You can also make a YouTube video, a video, a teaser kind of video, which is like 3 to 5 minutes, and then the investor will surely give you time if uh, your business is exciting for him. Another thing which you can do is you should definitely do is go to the website of the investor and see the investment thesis. If you know the
Absolutely.
investment thesis, it is early stage or pre-series A or series A or B. What is the ticket size? Which is the geographical, presence priority for the fund, and what are the sectors? And if you know these hygiene factors, these basic things, naturally, you'll get better traction with the investor. And last is that whenever you communicate with the investor, use instead of using financial jargons too much, try and use simple words, and you धंधे की basic समझ आपको होनी चाहिए. So these are the few things I would suggest the founders.
Yeah, interestingly, so one more thing which comes, like you have answered one more question which generally people come with, is that how do I understand where this investor will invest? Obviously, the way we said that internet presence of a founder tells about his story. Similarly, research about investor, where they have invested, what is their portfolio is also important. Then you would come to know what interests him, whether it's a diversified industry, or it is particular industry, or a particular kind of a startup, right? So that is also important. So suppose the founder got the yes, yes, okay, I'm ready to take it further uh, from investor. The next thing come is term sheet. I'm saying I always say to all the early stage entrepreneurs, especially, that do learn about entrepreneurship also and involves investment funding before you approach investor. I mean, there's so much available now on MentorKart, on YouTube, everywhere you can go and learn about investment thesis, investment terminology, etc. And term sheet also comes one top of it, right? So maybe term sheet, safe note. There are so many options people talk about, terminology talk about. So would you like to say something to them, to maybe early stage founder who doesn't probably understand much about these things, or he has not raised his first fund, Actually, the moment you raise first fund, you will learn a lot in any way. So before that, I'm talking about. Yes.
So, I mean, if I talk about term sheet, the answer might go very long. So, I will try to keep it short. First aspect of the term sheet is see, first of all, if you are raising investment too early, then it won't be really a very complicated kind of the agreement. But still, one needs to know a lot of things. Like the first one is whether it is a binding term sheet or a non-binding term sheet. A
Hmm.
binding term sheet means that after the due diligence happens on the company and the results of the due diligence if it means that there is a change in the ticket size of the investment, still the investor will go ahead and put money, and maybe at some different valuation. Non-binding term sheet means that even on the last day, when the investor is sitting to sign the shareholders agreement, he might walk away, and there is nothing stopping him. So this is the first. The second is it will mention the amount which the investor is going to put in and the valuation at which he is going to put in, which basically means that the percentage stake which the investor is taking will be there in the term sheet. In case the valuation has not been decided between the founder and the investor, then they have different options of putting in money, like convertible instruments. They can be convertible preference shares or convertible debentures, or it can be warrants also. So basically, preference shares and debentures, they are half equity, half debt. We call them quasi equity, quasi debt. So basically, what it means is that they will take convertible preference share, and the preference share will get converted into equity with a certain conditions mentioned in the term sheet and the shareholders agreement. So those conditions can be like 1 year down the line, whatever will be the revenue of the company, two times that will be the valuation, or three times that will be the valuation,
Okay.
or whatever will be the operating profitability, 10 times that or 12 times that. Or we it can condition can also be that whenever the next liquidity event, it means the next funding happens in the company, at that time whatever valuation at which that investment will happen, this investor, since he is coming in early and taking more risk, will get a 20% kind of discount on that
Yeah.
valuation. His
Absolutely.
preference shares will be converted to equity on a discount. And then we have things like employee stock option pools. A lot of startups can't give market salaries, so they give part in cash as in check, and part through employee stock option pools. These are equity shares in the company, and they get converted into cash. It's called vesting in 1 year, 2 year, 3 years, and that's how the employee can also participate in the growth of the company. Then there are certain conditions precedent and conditions subsequent, CPs and CS, which basically means that condition precedent will mean that whatever information the company has given to the investor till now, it is factual and true. So the company is signing on that it is true and factual. And condition subsequent means that the startup, the company will do all regulatory clearances, filings, compliances, so that this whole transaction is properly done. And then there are board of directors composition. So suppose the investor is entering with 25% equity, and there are four people on the board of directors. So the investor can say in the term sheet that out of four, one board member, the investor will have a right to appoint that board member, one out of four. So that is the composition of the board. And then we have some fancy things like founder vesting, uh, which are mostly used abroad and not so much in India. The anti-dilution clause is there, which means that if the investor is coming in today at 10 crore valuation, and the next investor 6 months or whenever comes in at less valuation. So the original investor will get additional shares so that his shareholding is the same,
Compensate. Yeah.
compensating. Then there are exit clauses. So, the first exit clause is that the company will come out with an IPO. If that doesn't happen, the second exit clause is that the company will appoint a third party valuer and get a third party investor and help sell the shares of the investor, assuring him of a certain IRR, internal rate of return.
Right.
The third option is that the company will buy back the shares from the original investor. And the fourth option is if the company is not buying back, then the founder will buy back the investor at a particular IRR by giving a certain return to the investor.
Hmm.
And then there are more, Ashishji, like we have drag along, tag along, right of first refusal. Happy to talk about that as well if you feel we can discuss now.
Yeah, I think so. It's good. Yeah, idea about at least people who are just starting, or maybe thinking about, or maybe working with on first term sheet in their first startup or whatever it is. Yeah, it's a good idea to give a perspective. Coming to
Okay.
the coming to the one more question also coming. Few founders have raised and come across a term called bridge financing, right? What is this all about? Maybe in a layman terms, when maybe in few minutes, quickly you can just tell us.
So bridge financing is if suppose one had every company has a cash burn and it plans out its future cash flow use of cash. And if suppose your next round of financing is 6 months away, but you are falling short of money, so you raise a bridge round. A
Right,
bridge round, yeah, a bridge round typically means less than 1 year tenor kind of money at a high interest rate. If it is a loan bridge round, so you go to the bank or financial institution or NBFC or venture debt, you tell them I need less than 1 year loan. I will pay high interest for it, and once my funding round happens, I will pay it back. And similarly, equity bridge round would mean loan against shares. So a startup says my Series B is one year away, but right now I'm falling short of cash. So I raise a small round in between by pledging my equity shares with the financial institution. Similarly, IPO bridge means that MentorKart is coming out with an IPO, and the IPOs or the whole SEBI process takes time, and market making takes time. So you pledge your shares with some investment bank, and you raise money. And then there are differential voting right shares, which means that Mark Zuckerberg holds less than 50% equity in Facebook, but holds more than 50% control over the board of directors because Mark has differential voting right shares. His shares have more voting rights in the board of directors than the shares held by other investors. So, these are some of the bridge financing ways.
now even there's this option is now I think so allowed in India, in terms of where the board
In India, Tata Group is using it a lot. Tata Group historically had diluted its shareholding in a lot of its companies below 50%. So after Ratanji came in, he utilized DVR shares to maintain control over the company. It's a large conglomerate, more than 100 companies, and so that way.
Yeah, it's interesting actually. Yeah. So let's take one question which has come from the audience and see whether we can answer that quickly. Okay, think of IoT. We would be glad to be part of your live conversation. And as you were saying that about innovative startup, we are also job board startup company. Okay, founded almost 2 years back, and we would like to have your advice to us for a development and strategy to reach out to customer around the world. Okay, you have any input for him?
So, nowadays, anything related to knowledge, it's better to use digital marketing. Within
Hmm.
digital marketing, you have SEO, which is Google search engine keywords. You have SMO, social media, SMM, social media marketing. Some very innovative. I see either you pay money to Google and Facebook, Instagram and LinkedIn and Twitter. Either you pay money to all these because their algorithms are such that if you try to do it in an organic fashion, your reach won't be there. So ultimately, you will have to pay up. So I know of a company who raised $20 million from Astro Group Malaysia, and out of 20, they burnt $12 million to Google and Facebook. So either you have that kind of approach, or there can be two more approaches. The other approach is content driven. Uh, you'll be surprised to know these big FMCG companies, they have a big content driven strategy. So they make original content, they align it with the Google algorithm. Like, the number of the times keywords have to appear in the article has to be three or four and stuff like that. And because of the original content and appealing content, a lot of organic page views and everything, they get a lot of success. The third one is, I have been a part of this initiative with a company in India. They are creating content videos like MentorKart also does. And
Okay.
because investors like to appear in such a nice platform, especially with a good name of people like Ashish ji, like you, so they appear in these videos, and all these video work, making short video content, it's very appealing, and to the viewer also nowadays. Attention recall time is very poor, and attention
Yeah.
spans are very poor, so you can use this kind of content driven strategy to get views. I know of a startup which is into HR technology, and they believe in fulfillment driven platform. So their SaaS based platform is fulfillment driven, and it is video marketplace kind of platform, and also they pay out money when companies use their platform. So they reward consumers for using their platform, on the both sides, on the resource side as well as the company side.
It always help. I think so. I can very well correlate this because when we started MentorKart and we were not having a platform, we did not have a product also at that point of time, but we wanted to be in on internet and spreading the knowledge, awareness, interacting. What we started doing first is only creating content, doing live sessions, creating blogs, creating all those things. And today we have a lot of content. If you search on MentorKart, Google Pay, करेंगे, then you will get lot many things which we have created over the period of time. So
So
that is how.
because your content is genuine and original and exciting, and
Yeah,
hence people are coming up to it, and that's why the your success. I think Ashish ji.
absolutely. So the viewership is increasing, right? So that's how it is. I think so. We can very well correlate since we are running now on the time, and we want to have a short half an hour discussion. So last question, which comes from me always on a mentoring side. What do you feel is that the mentorship, what MentorKart is thought, or even otherwise, is important for early stage entrepreneurs, or even after that, um, while learning the entrepreneurship in a journey? And I always say on a MentorKart that why learn by making mistakes when you can learn with mentors? So maybe any suggestions or input or for the early stage founders.
So technology is, you are a technology guy, Ashish ji. Technology keeps on changing. If you are not conversant with the trends in technology, also better ways of doing business. There are companies who have made phenomenal mistakes, and even after reaching billion-dollar valuation, they have shut down. So, mentoring is very crucial because One cannot do everything by on their own, and you need thought leadership. And when you have mentors who have access to different kind of companies, what they are doing, and so their learning curve becomes quite steep. And because you are on a steep learning curve, you tend to make lesser mistakes. And also, mentor, I think, apart from knowledge and advice and confidence and motivation, an entrepreneur has to be an iron man. Sardar Vallabhbhai Patel se zyada himmat chahiye entrepreneur ko. And Krishna ने जैसे अर्जुन को mentor किया, I mean, so we need such kind of mentors who can handle these entrepreneurs. And the third aspect is uh, using connects to give you business. So,
Yes.
I am consulting with a UK-based SaaS company, and I give them, pass them business connects to a lot of places, and so these things also, they also matter a lot.
Absolutely. Okay, I think so. Tushar, thank you so much for coming over. We have one more question. Okay. Devinder is asking that how MentorKart got the funding. Okay. So, yeah. So, as Mr. Tushar has said, that you have to be genuine in your approach. You have to be passionate. You should have a good team. Yeah. The product which you are building should talk for itself, and it should not be pointed means for one time kind of a thing. It has to be futuristic in nature, and that is what is very important, especially in edtech domain. Like we were talking about, people who are opening a startup in edtech which is K-12 or even beyond, and we thought about mentoring at its core. So in our case, the mentoring is at core, right? Where whosoever it is, right? So target segment, whether you are a student from college or you are a professional in working in a company, or you are an entrepreneur, you are forming a startup, everybody needs mentor. Obviously at every stage you need a different expertise, you need a different kind of mentor, different kind of domain expertise. So platform offers all that. So it's futuristic in nature, and many things which we want to do will come in later time. So the vision was very clear what we want to do. The team we were forming slowly and we were building it, plus the experience. Because when you are getting into the mentoring, obviously you will, as a founder also, if he's an experienced founder who has done mentoring all its round, and also previous success which we have done. So all that put together, yes, there is a lot of interest for mentor card people are showing. More than that, we want people or mentees to be successful in what they want to do, and that will make us more successful than and than any funding or anything, right? What is more successful for us is that if the people who are coming on the platform or seeking help, and they're getting benefited out of it, which is customer, right? In the general term, that is customer, right? So the customer is getting the value. No startup can be left not only for funding or customer success. So either he will be funded, or he will make his own money to grow as a gradual growth, right? In terms of so thank you so much, Devinder, and thank you, Mr. Tushar, for coming over and sharing your views. It was a nice interaction. I generally keep it 30 minutes only, because it takes, as you rightly said, less span of time. And however, on a mentor card platform, when you're joining, so on commercial platform which we are coming up with in end of this month, there we are taking lot of small videos also, asking question, taking answer, and showing it to the person. So if that question is in his mind, it get answered, something like that. So we are doing lot many things to do our lot of creative content which will help us. But I still feel that span of time has reduced, but I still feel that people who want to learn, they will spend more time. They are ready to willing spend to 30 minute, 40 minute, 1 hour, obviously on a learning. And I do it, at even now I do it. I watch many of the videos and classes I attend to learn myself. That's important. So you can't have everything coming in 2 to 3 minutes for you. So you need to spend more time and more for learning and knowledge. Thank you so much.
See,
Yes.
yeah, I mean, Ashishji, I would like to finish by by thanking you for calling me today, and it is my humble pleasure to be on the same platform as you and speaking about startups and everything. And I only have best wishes for a platform. In fact, I look to contribute to it in continuing